Good morning, traders. This is Nick Mastrandrea with Market Tea Leaves. Here to interview Mr. Dan Cook, who is the Director of Business Development for Nadex.com. Nadex is offering, in my opinion, a very, very unique value proposition to traders in terms of things likened to binary options, bull spreads, etc. Now, obviously, there's been a bit of misconception or misinformation, if you will, regarding and concerning these types of instruments. It's our goal and objective to offer you as a trader an alternative to what you're currently trading right now. And if you have any kind of thoughts, etc., in terms of alternatives, our feeling is, this is a viable alternative. This could be for you a way to go, if you will. In any case, so Dan, just out of curiosity, how long has Nadex been around, and how did it all come into being?
Nadex started out in 2004 actually as a firm called Hedge Street, which is a CFTC regulated exchange, acquired by IG Group end of 2007, early 2008, totally revamped, matching engines, a lot of technology upgrades, different contracts brought about, and rebranded as Nadex in 2009. First couple of years was really kind of just starting to get the word out, a lot of beta testing, and really hit the ground running in 2010, and the growth has been pretty amazing actually over the last couple of years.
Excellent. And what do you feel is I guess the key value proposition that Nadex is offering to traders?
Well, I think one of the things you mentioned it at the beginning was an alternative way. There's a couple of key value propositions, and one, we see everybody has exposure to the financial markets in one way or the other, and a lot of people want to trade these. Now, it can be very difficult, as we know from a capital perspective, to go in and maybe trade like an oil contract on a traditional futures contract, because of either the per point value or just the margin alone, it can be quite high. So there's a pretty high barrier to entry in the traditional futures markets. So it's just cost prohibitive for a lot of traders. But they want to be able to trade. What Nadex offers is actually a lower barrier to entry. Limited risk type contracts. So as opposed to being margined, everything is fully collateralized. So when you read those risk disclaimers on a traditional, anybody that's traded futures or options has seen a million of them, you can lose more than you have in your account. That's not the case with Nadex. Your capital is your total risk on the trade. I kind of consider them options for non-options traders. And so it allows people to come in and trade markets. The underlying markets are like the ES, the E-mini, the S&P, gold, oil, currencies. They can do it at a lower cost of entry. And the limited risk nature means, there's no margin calls. You can't lose more than you have in your account. So it's a great way to get started, as well as for people that are have years and years of market experience that want to try something different or a different way to get exposure. Another big thing, Nadex, and really the value proposition is, instead of being designed for the institution, to trade large contract sizes, we were designed specifically for the retail trader. And we're the first place where just the regular retail trader could come in and actually be a direct member of the exchange. And one of the things we've seen, a lot of people have been following the high-frequency trading movement in a lot of the markets where people are basically buying speed, getting as close to the exchange as possible, and even experienced traders are just getting whipped out of the market.
Yes, they are.
And with Nadex, we don't allow anybody to basically buy that speed. We don't allow anybody to co-locate or cross-connect with the exchange, which keeps it a fair, level playing field for the retail trader.
Interesting. So I guess the value proposition then is, in terms of options, it's likened to a traditional option where what someone puts up is basically what they can lose and all that they can lose.
Exactly. It's very similar to buying a call or a put in that your collateral that you put up is basically your risk. Where it's a little bit different from that, for instance, if you're selling a call or a put, depending on which side you're taking on that, obviously the risk can be unlimited. With Nadex, all of the contracts, whether buying or selling, whether you believe the market's going up or down, are limited risk on both sides.
Interesting. Yeah, because basically you're dealing with a future. And I guess you don't have like any kind of limitations in terms of number of contracts, et cetera, or I guess per se number of options, as long as the trader has the capital to handle something like that.
there are some position limits depending on the market, but they're pretty substantial. Not too many people run the risk of actually hitting those. Those are published on our website.
Okay.
But as far as a risk management, yeah, you can put on as many positions as you basically have collateral for. Now, I'm going to say that with a disclaimer that in any type of trading, we know that if you have $1,000 in an account, you probably don't want to be sitting there with $1,000 in the market. You want to still adhere to good risk management principles as a percentage of your account.
True. No, absolutely true. Absolutely true. And I guess in terms of the binary options themselves, you also deal with a ceiling and a floor. So someone doesn't necessarily have to be concerned about being stopped out of a particular position, etc., because it's either gone too high, gone too low, etc., which is one of the things that you always have to be concerned about with traditional futures tradings. There you always have, you're very, very price conscious, and if it goes below if it goes below your stop limit or your stop level, you're done. I mean, you're stopped out. You took a loss. It sounds to me like what you folks are doing with Nadex is, well, you could have a contract or an option that could expire at the end of the trading day. So during that day, I mean, you can go anywhere, but you don't necessarily have to be concerned about watching it every 2 minutes or keep your eyes glued to a screen, if you will. Would that be correct?
Yeah, definitely. And there are a lot of different, obviously, styles of traders. Some people love to stay glued to the screen and watch every tick. For me, I was never like that. Obviously, when you're trading traditional futures or forex, getting stopped out is a big concern.
Yes.
And what I know has happened to every trader, if you've traded more than about 15 minutes in your life, you've probably had a position where it went against you, you got stopped out, only to watch the market turn back around and had what would have been your favor. But your trade's over, you already lost. With a binary option, they have a floor of 0 and a ceiling of 100. So basically, I can buy one, if let's say I'm buying it at 30, the market goes against me, maybe that option drops down all the way to 0. Well, that's my maximum loss. If I'm trading, let's say, oil or gold, and there's a huge world event, obviously there's some tensions in Korea. We don't know how that's going to affect the market. If something there would happen, obviously we're going to see some massive shifts. Now, I'd be kind of concerned if I'm trading a futures contract or forex and what that could do to my position. I could definitely get slipped, if not gapped right over my stop, and lose more than I thought I would in the first place. With a binary option, I know up front what I'm getting into, what my maximum risk is, because it can't go negative as far as past 0, and it can't go over 100. So whether I'm long or short, it's capped on both sides. I kind of compare it. There was a movie with Robert De Niro called Ronin, and he had a line in the film that said, I never walk into a room I don't know how to walk out of. Well, and we don't ever want to walk into a trade we don't know how to walk out of, but unfortunately, we don't know when the big next black swan is going to happen.
True.
That crushes us. And with a binary option, I know exactly when I get into that trade, the most important thing that I need to know as a trader, what is my absolute risk? 100% defined.
Yeah, see, you bring up a very good point, Dan, because what happens is with a lot of traders, and I know it's happened to me, it's happened to, I think, anybody who's ever traded a futures contract, I think one of the chief complaints regarding high-frequency trading is these bots take over, and all of a sudden, you do a very good job of technical analysis, fundamental analysis, and you say to yourself, okay, well, the ES contract, I'm going to get in here because, technically or based upon Fibonacci retracement or based upon, a Kelto channel or Bollinger Band or whatever it is, whatever is anyone's using, this is where I think I should enter, okay? And you do. You enter there, trade's executed, it's going in your direction or starting to go out in your direction, and all of a sudden some bot comes in and takes over, and all of a sudden this thing just nosedives like like it's going straight to hell. And, you get stopped out, and all of a sudden, 5 minutes later, oh my God, look, it's going up, and it's going way past where you wanted to get out originally, and you say, so what the heck happened here? What happened here? Nobody can figure it out.
I have to laugh because I've been there personally more times than I can count.
Oh yeah, absolutely, yeah,
And,
absolutely.
you know, I think that's one of the big things on the binary options or the bull spreads that we offer as well, is that I can manage my risk with 100% certainty
Mm-hmm.
without using a stop. So it gives me time to be right. If
Mm-hmm.
I've done all my analysis, one thing, I don't have to worry about losing a lot more than I expected on the trade because my risk is
Mm-hmm.
totally fixed.
Mm-hmm.
And also, if it does make that quick move, because I've gotten into those little docile markets that, you know, they're plodding along like a little soft lamb,
Mm-hmm.
and all of a sudden the lion comes out, bites your head off,
Right.
and you're sitting there looking like, what just happened?
Yeah, exactly.
And you know, with the binary options trade, I don't have to worry about that because I can absorb those whipsaws.
Yeah, very true. Very, very true. Now, I guess the other aspect that comes to mind though is that even if someone initiated a binary option trade, you know, let's say it's going in their favor, you know, it didn't hit 100 yet, you know, maybe it's not going to hit 100, but I guess, you know, from the trader's perspective, they do have the option of getting out of that trade if it's a profitable trade for them, even though it didn't necessarily hit their target. Would that be a correct statement?
That's 100% correct, and I think that's a very important point to make.
Mm-hmm.
A lot of times binary options are called all or nothing because at expiration, they're 0
Right.
or 100.
Mm-hmm.
But as a trader, my interest is in trading.
Mm-hmm.
And so when I look at these, you know, if I buy a binary option that is well out of the money, price is essentially the probability. So I could buy that at 10.
Mm-hmm.
The probability of that hitting 100 might not be that high.
Right.
But I'm just looking for a move in the market. So if it goes from 10 to 30,
Mm-hmm.
well, awesome. I'll set a limit out at 30 or 40,
Mm-hmm.
and you can trade it away. And I think that's a really key aspect and one of the big differentiators in Nadex and what we offer
Mm-hmm.
versus a lot of other sites out there offering what they call binary options. Is
Right.
that they're a very tradable product, and you know,
Mm-hmm.
if I'm a trader and I put on a position for 10 contracts, why not take 5 off for profit or scale out
Sure.
and run my normal strategies?
Sure. Absolutely. 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 I think that clearly is a very, very key advantage, and not necessarily, you know, locked into it. They don't have to wait until this thing goes to 100 or whatever. I mean, if they want to get out of it prematurely, they could. I mean, they have that, for lack of a better term, option to do so, which I think is very key. But you also have, I guess, you also have like different flavors of options. For example, if I take a look at the products that you offer, you've got binary options, and I guess these have like an expiration time or time of day. But you also have a bull spread, which, as I understand it, correct me if I'm wrong, you can initiate the beginning of the day or at any time during the day, and it's good for the entire trading session.
That's absolutely correct. There's there are a couple of different types of contracts. There's the binary options, and then there's the what we call the bull spread. Which, don't let the name fool you. Whether you're long or short, whatever your bias is on the market, you can trade them long or short.
Right.
Should probably look at changing that name just because I think to me it's a little misleading saying a bull spread. I think the market, I'm bullish.
Yeah.
But basically that's we've taken a very simple option strategy, which is just a spread. Whether it be a call spread or a put spread, depending on your direction. We've made that even simpler by creating the range. So for instance, on currencies, we do about 80 different ranges a day.
Right.
And you have a same concept of a floor or ceiling. And so I can get in maybe to a spread if I was trading, instead of trading the underlying market maybe on the Euro USD, I could get into a bull spread, not have a stop because I'm using the floor ceiling. It's basically an option to limit my risk. And so I can get into my trade. If the market whipsaws against me, who cares? I knew my maximum risk right away. Yes, I lost the trade, but if it bounces back and goes in my favor, then I have the chance or the time to be right.
Exactly.
And particularly for anybody that likes to trade around fundamental news announcements, like a non-farm payroll, I don't know how many years I struggled trying to figure out a way to trade that report, only to find out after, I'm a slow learner in a lot of cases, so just to get whipsawed out.
Sure.
And even if I was right on my market direction for the day, it didn't matter because I was out of the trade. And you can use whether it be a binary option or a bull spread to actually get in, limit your risk, whether it be around a Fed announcement or anything like that. Other times where you might not trade and use these contracts.
You bring up a very interesting point, Dan, because one of the things that I do or market tea leaves, and I advise my followers is there are 2 days during the month I don't trade at all. One is Jobs Friday, and the other one, and the other one is FOMC Day. Only because, historically speaking, and again, that's been my own experience. So maybe I'm a bit biased in that regard, but it's been my own experience that on those two particular days, the market doesn't act with any sense of normalcy whatsoever. Now, there are some traders out there that will say, well, trade both sides of it. Okay, well, I've done that too. Okay, go long, go short simultaneously. And, with a lot of trading platforms today, particularly in the futures market, you could do that. The only problem is you can get stopped out on both ends and wind up with a double loss, and that's happened too. So.
It happened to me more times than I can count. And that's the thing. You get a big whipsaw, and non-farm is a great example where you see, it's payroll Friday. Everybody's all excited. You watch the report come out, and bam, the market. Dow is a great example.
Exactly.
You can look at a big range. Maybe it jumps up 100 points.
Yep.
And then all of a sudden it crashes back down and it drops 150.
Yep.
And at the end of the day, it closes of a change of 15 points.
I know. That's crazy.
Yeah. So whether you were long or short, both sides got stopped out, and you just took a double loss.
Exactly.
What you could look to do is like with a binary option, because of the limited risk, buy one at 10, you've got 10 points risk. Sell one at 90, you've got 10 points risk on that side. Set your limit orders out. If you get a whipsaw, you can't A, get stopped out.
Yeah.
But B, if you get that big whipsaw, you could get both sides filled on the limit.
True. That is very, very true. Very true. And that's the problem. That's the problem I see with traditional futures trading. I mean, basically, you've got to be right going into it, and therein lies the problem. Therein lies the risk, if you will. But with this type of a vehicle, I mean, really, there's risk involved. There could be potential losses, but the losses are limited, and losses are known. When markets become erratic, I mean, any broker out there, particularly in the Chicagoland area, will say, it could go below, and you get stopped out for more of a loss than you thought you were going to get stopped out for, because they don't necessarily guarantee that or adhere to any particular rule as it concerns that. With this, I mean, basically, if your loss is going to be 30 points or $30, per contract or per option, if you will, you know what that is going into it. You already know what that is. So there's no surprise. There's no big surprise there.
Exactly. I think, and you'd mentioned the FOMC announcements. Probably a lot of people that will be listening to this remember March of 2009 when the Fed first came out with their first round of quantitative easing.
Yes.
And I remember, and I talked to a lot of traders before that, and I said, don't even put a trade on around this meeting. But yet we saw a lot of people, and they're trading currencies or the ES, and maybe they've got a 30 pip stop or a 3-point stop in the ES. Well, I hate to break it to them, but on the euro dollar, as they know, if they were in a trade, it gapped 180 pips. So instead of taking a 30 pip loss, now they've got a 180 pip loss.
That's right. That's right.
That can't happen on a binary option or a bull spread. 100% what your maximum risk is.
Sure. Absolutely true. Absolutely true. Now, do you advise or recommend to traders that they utilize a traditional charting tool, charting platform, if you will, in terms of deciding, where something's going to go either long or short? For example, for myself, I use NinjaTrader, okay, and I use it to trade the futures, etc. But I use it basically to ascertain, all right, where am I going to get in, where would I think I'm going to be getting out, etc. Do you advise traders to continue utilizing those platforms, or do you have, or does Nadex have their own trading or charting program themselves?
I 100% advise people to use a different charting package. I obviously work for Nadex. I'm somewhat biased. I would never look at a chart of a binary option.
Okay.
The reason being, I technician by trade, and the underlying market is what moves the actual binary option, not vice versa.
There you go.
And there's only so much you can glean from a one-day contract or even a weekly contract. So you'll want to do all of your analysis on the underlying market. Nadex is an exchange. We can't publish data or charts from other exchanges.
Right.
And so I would definitely recommend anybody that's doing any type of technical analysis, definitely work with the charts you're comfortable on that offer the underlying market.
Okay, and that makes perfect sense. Okay, good. That makes perfect sense. I guess in recent times there's been a lot of misconception concerning binary options. Some folks out there have claimed malfeasance concerning these instruments, etc. I think a lot of that has to do with the stuff that was going on in Cyprus a few weeks ago, or even before that. But I remember even a few months ago, when I first took a look at binary options, everything I heard about it was, unfortunately, wasn't positive, because there was a lot of stuff going on with Cypriot bank accounts, Cypriot trading accounts, and there was some people talking about identity theft, etc. Those types of things. What are your thoughts concerning all that?
Well, unfortunately, the term binary options is in a way kind of generic. And then there's, as you mentioned, there's a lot of shops that are offshore from the U.S. that offer what they call binary options, but they're substantially different to what Nadex offers. One of the big things with us, we're CFTC regulated, so we are an exchange, and that comes with transparency. We offer multiple strike prices, so you have various, basically, you might have 20 different strikes on an instrument, so you can, as a trader, really look at your technicals, look at your levels, whether they be fib retracements or pivot points, whatever you're using, and you can hone in on your risk reward. So additionally, you can trade in and out of our contracts, as we talked about. You're not locked in like with a lot of the offshore companies.
Right.
And so what Nadex offers is really what I would consider a tradable contract, and substantially different from from a trade that you might get in that it's stacked against you in the first place. You have no transparency or vision into really where the market is, and you have no, really important out of binary option, you have no vision into the settlement price. For example, being an exchange, if you have a question about how a contract was settled, well, we send you the exact underlying price and data showing you how it settled where it did. You don't really get that anywhere else, and it has caused a lot of confusion in the industry. And I really believe we'll see a lot of those places go away. You just can't have a business model like that. But we really focus on what we do, and that's being a fair, regulated exchange where the retail trader can come in and really get get that transparency.
Well, you bring up a very key point too, Dan, because CFTC regulated. Anyone that I know who's in this business, who is under the I guess the guidance, if you will, of CFTC. I mean, at the end of every single day, they have to be able to prove that they are solvent to the CFTC. There can't be any funny business going around with something that is CFTC regulated. I think your issue is valid in terms of a lot of these offshore accounts, because many of them are not CFTC regulated. So I think that lends a certain amount of safety, if you will, a certain amount of confidence, if you will, in terms of in the mind of the retail trader. So I think the point is definitely well taken, without question.
Yeah, definitely. It's a big aspect, and all of our funds are held in the U.S., which to me, as a U.S. trader, that's a pretty important aspect. I mean, if I have an issue with any brokerage accounts or anything that I've had in the past, I want to know where I'm going to have to settle any type of claim or where I can go.
Yes.
I don't have those assurances if some company's registered in a country I've never heard of.
That's true.
Like, where's my money actually sitting?
Exactly true. And particularly with all the stuff going on in Cyprus over the last few weeks, I don't think it lends a lot of it doesn't lend an element of confidence in anybody's mind, unfortunately.
Exactly.
No,
exactly. Yeah, it doesn't inspire much confidence at all.
No. Because a lot of I've heard stories of folks that had gotten burnt by that, etc. And the first question that comes to my mind is, okay, well, where was your money at? Well, I think it was in Cyprus, but it might have been in England, or it might have been somewhere else. And it's like, well, if it's not really U.S. and U.S. denominated, I don't know what to tell you there, pal. Interesting.
Exactly, and that's just such a huge point. When you look at where are your funds actually sitting, and where do you have to go if you do have to make a claim? I think uh, you could find out they're held in North Korea. We just don't know. But with Nadex being regulated, we basically have those safeguards of the CFTC regulation and the oversight, specifically on how we can handle funds, where we can hold them. What a whole process is if there are any types of issues, or you want to withdraw. Well, here's the process, and it's laid out, and we have to adhere to that. Otherwise, we wouldn't be around long because we are regulated. So everything has to be above board, as an exchange should be.
Yeah, exactly correct. Yeah, exactly. Interesting. What in your mind do you feel is the future for these types of instruments? Because I've heard a lot of people talk about certain things, and some people are saying, well, maybe, it'll wind up on an iPhone, and, basically with a binary option, it's either yes or no, long or short, so it's, very easy to trade, that type of thing. Do you see something like that in terms of a future for these types of instruments?
Well, I think the future, we've seen pretty amazing growth just over the last couple of years. With Nadex, and one of the big reasons why we talked about earlier, it's an alternative. There are a lot of people that are just priced out of the traditional markets, or they just don't want to get involved because they're tired of getting their face ripped off by the supercomputers that are trading in nanoseconds.
Yeah, exactly.
Where we offer, really the vision was to be able to afford people everyone access to the markets, not just huge firms or institutions or the Wall Street crowd, but really be the exchange. I don't care whether you're a truck driver or a waiter or a doctor or a dentist. If you're interested in the markets, we're filling that niche and that void, and I think that's really important. And as people get more educated and continue to see what these can really do, the previous path has been actually awesome growth on our side, and I think that will continue, particularly as more people get exposed to these and really learn how to trade them.
No, this is a point that's clearly is well taken, without question. I think one of the things one of the things you brought up is the margin requirement for traditional futures contracts as well. It's one of the reasons why for a lot of folks out there today, particularly with with the economy being the way it is, that type of market is really out of their reach. They can't afford $1,000 trading margin for one CL or crude oil contract. They can't really afford it. It's like, well, I really want to trade two. I can't. I can only trade one. Or, God forbid they decide, well, I really like the German DAX, and you're going to to buy or sell one of those contracts, the margin requirement is out of the reach of most people. Well, I think your point is very well taken, without question.
Yeah, definitely. I mean, the margin requirements and just really the per point risk as well.
Yeah.
If I have 10 grand and I want to trade oil, well, yeah, I can afford the margin, but if I put a $1 stop on a crude contract, that's $1,000.
That's right.
Do I really want to risk 10% of my account on one trade? Heck no.
Yeah.
But I can do basically almost an equivalent using like a Nadex bull spread contract, where I actually have lower risk, less collateral requirement, which is a nice combination. It's kind of what I call effective leverage. It has the same principle of leverage without the downside risk of losing more than what you put up in the first place.
Sure. See, this is one of the things I tell my folks at Market Tea Leaves, my newsletter. My objective is very, very clear. I mean, I want you to hang on to your hard-earned trading capital, because I know as a fact, look, that's not easy to replace. It's just not very easy to replace. And every time somebody takes a loss like that, and it's not defined, etc., or it's too much for them to handle, now all of a sudden there is no more business anymore, because if you're not hanging on to your hard-earned trading capital, there is no business. And that's a very, very key point, I think. It's certainly an excellent value proposition for what you folks do and for what you folks offer.
Definitely, that's a really key point, because I'm not in a position where money just comes easy. I don't know about anybody else, but I want to hang on to it, and I want to hopefully make it grow a little bit. But I certainly don't want to lose more than what I've earned in the first place.
Yeah, there you go.
And so It's still a market. There's risk in any market, but having that assurance of knowing what my maximum losses are up front, from a psychological aspect as well. We've seen I've seen a lot of traders in the past that are trading, currencies or whatever, and their palms are sweating and they're nervous. That's no way to trade.
Exactly.
You can't be successful if you're super nervous about it. And from a psychological aspect, we see a lot of those mistakes happen. If I know, hey, this is what I can afford, this is my risk, and this is my maximum risk, from a psychological perspective, which is the most important part in trading, now I'm in a much better space.
Yeah, that's very, very true. Because I've seen this myself. I've seen this with a lot of traders myself, where all of a sudden, something goes against them 4 points, and so now becomes life or death to them. Or they're trading with scared money, and if they're trading with scared money, I mean that's a worst case scenario of all, because every time they take a loss, it becomes very devastating to them, and it takes a while for them to to develop the mental stability, the mental strength, etc. To have the courage to step back in. That's very tough. It really is.
It's really one of the toughest aspects, and as we know, is the market. And one of the things I love about the market is it doesn't matter whether you have your PhD and 17 initials behind your name on your business card, or whether you barely got past 5th grade.
Exactly.
The market will reward or punish equally.
Yeah,
and which is one of the great things about it. But particularly as a newer trader, and I've been there, I've had my share of accounts blow out.
Sure.
In the early days. It can be devastating mentally, and you make a lot of mistakes when your palms are sweating, and if the market's exciting, and a longtime trader said this to me in my early days, if you're excited and your heart is racing, you're doing it wrong.
Exactly.
And he said because you're taking too much risk.
And the other aspect of it comes into mind is, and there's a term that I remember from years ago that we used to call kamikaze trading. And what kamikaze trading is, or otherwise revenge trading, okay? This is where you take a loss and you're so angry and you're so furious that I'm not going to let them take my money away from me. And then you go in and you make the most bonehead trade you could make, and you want to lose it even more because your negative emotions took over and ruled you for that one brief second that you did that. And try telling a broker that, I was really angry at the market, and it's like, I didn't pull the trigger, you did, and it's like, I didn't make that trade, you made that trade.
Yeah, I've seen it happen. You lose a little bit, and then you compound things because of the ego kicks in, and it's just like, no, I'm going to get that back. I'm going to slam it, so I'm going to double up.
Yeah.
No,
Oh God.
No.
Yeah.
All you do then is lose twice as much.
Exactly. The worst case scenario of all. And likewise, that's the other thing I turn around and tell my followers too. Look, if you made money today, be a very happy camper. If it wasn't what you wanted to be, I don't even want to hear it. If you made money today, you've got no call to complain, because these markets are extraordinarily volatile, and unfortunately, anything can happen in a volatile market. Sadly, but this type of an instrument, this type of a vehicle, in my mind, limits that aspect, and I think that is highly commendable. Certainly my goal and objective is to make sure that as many people know about it as possible, because I think that this is clearly the next big thing, if you will, or the next great value proposition that the market can offer to the retail trader, without question.
I think so as well, and obviously, I'm biased. I work for Nadex, but even before I was ever here, when I saw what their contracts were and what they were doing, as a trader, it just made a lot of sense. And we're going to continue, and I appreciate this opportunity, Nick, because this is a great venue for us to get the word out, and just speak honestly about the markets. There's no guarantees in life or in the markets.
Sure.
Really, all we can do is manage our risk, and that's really what I think Nadex offers to anyone interested in the markets is a way to fully manage any risk.
Now, I guess the other thing, regarding Nadex itself is you folks do offer a 10-day trial of your platform, such that someone could pretty much test drive it for a couple of weeks to see whether or not it's right for them. Is that correct?
Yeah, definitely. They can go to nadex.com,
right.
Open up a demo account, try it out. And I'm happy, for your listeners and subscribers, if somebody has a live account, I'll give them the demo for the life of their live account. They just can shoot me an email.
Wow. Wow. So they could have a so they could have a demo account for, I guess, even longer.
Oh yeah, I will. I'll be happy to extend it. One of my key
Mm,
philosophies
mm,
with this, and then really shared by Nadex, is it doesn't do anyone any good if
mm,
somebody comes in,
mm.
they put whatever they put into an account. Let's say it's $1,000, and they
Right.
place one trade and they're gone. I'd much rather have somebody sit for 6 months on a demo account,
Yes.
really understand the contracts, learn how they trade. They're a little bit
Mm,
different than the traditional contracts, so it takes a
mm,
little bit of time. Learn the platform, and you know what,
mm.
take their time, because
Yeah.
as we know, there's risk in the markets.
Mm,
I'd much rather have somebody that takes a look at the demo for a month and
mm,
says, you know what, maybe this isn't for me,
mm, mm,
than somebody that puts real money into an account and then learns that it's not for them.
exactly. Yeah. Exactly. That's a worst case scenario, because now all of a sudden their mind is saying, "Well, this doesn't work. I tried it. It doesn't work." You know. I think you're pretty much right on there, Dan. Very much
Yeah.
right on.
We,
And
yeah, we,
I want to thank you very much for your time as well. Without
oh, I appreciate it. Thank you, and I'm happy to be on any time.
No, I thank you very much. And folks, just speaking with Dan Cook, Director of Business Development for Nadex. I would encourage all of you who listen to this, to see this, to check it out, check out their site, etc. If you have a desire to do this, learn more, talk to the people. They've got great support people. I've talked to them myself. Check out their trial, etc. Um, I think you're going to find this to be, the next big thing and the next value proposition. So thank you very much for your time.